Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our Double Shot interviews, and I'm joined by Elaine Campbell, who is the Director of Compliance at the Financial Markets Authority. Welcome, Elaine. Thanks for coming in.
Thank you.
Elaine's here to talk to us about peer-to-peer lending and crowdfunding. Now, obviously, two very new things in the New Zealand financial markets. I thought we'd just kick off with really basic stuff and just sort of outline the differences between the two of them.
Yes.
So, because obviously they are different, and
very different.
That's a good start. So, if you don't mind, so how do you guys see peer-to-peer lending?
Okay, that's a really good place to start. So, if you think about if you've ever made a loan to your brother or your sister, that's essentially a form of peer-to-peer lending. You're making a loan to a peer. And peer-to-peer lending is where an intermediary sits between you and the person that you're lending that money to. So essentially, peer-to-peer lending is where an intermediary matches people who want to borrow money with people that want to lend money. So you are effectively making a loan to somebody and earning interest on that money that you are lending. Crowdfunding is very different to that. In crowdfunding, you are contributing your money to get a shareholder interest or equity in the company that you are subscribing or giving that money to. So they're quite different products that you are involved with, and it's quite important that you understand the differences because the risks obviously are quite different.
Yep. And under new legislation that came in towards the end of last year, obviously the FMA has been given the authority to issue licences for both peer-to-peer or P2P
Yes.
and crowdfunding. Thus far, you've issued one P2P licence to Harmony and two crowdfunding licences to Pledge Me and Snowball Effect. How many more do you think you may be issuing, I guess, in the next few months?
In the crowdfunding space, we're actively working with an applicant at the moment in respect of their licence. So we know that there's going to be a further licence in that space. We've also got an applicant who's applied across both categories, peer-to-peer and crowdfunding. That applicant's asked for us to put their application on hold at the moment whilst they think of ways to capitalise their business to enable that business to more successfully operate. We've also had indications from probably across both categories, if I take the numbers in a whole, maybe 6 or 7 entities. Whether they actually manifest themselves in applications at this point is a little unknown, but we would expect, I imagine, to see, that 6 or 7 to maybe turn into 2 or 3 actual applications.
So I guess if we get the crystal ball out for a second and look ahead a year, 2 years from now,
yes. How
many P2P lenders and how many crowdfunders do you think there might be that are licensed?
Yeah, I would say that in the crowdfunding space there will be that minimum of 3, probably a crystal ball here, a maximum maybe of 5 or 6. And in the peer-to-peer space, we might be looking, we've got 1 now, maybe 3.
Okay.
Yeah.
And look, in terms of peer-to-peer, that's the one that we've taken more interest in, given, I guess, our focus here at interest.co.nz, and this is all about lending and borrowing money
yes.
Between individuals, small
yes.
businesses. I guess we've got the one platform up now. You're thinking another couple coming, perhaps. Who should be investing through peer-to-peer platforms, and who should be borrowing through them? I mean, is this something for anyone?
We would say it's not something for everyone. I think it's important that people who use these platforms really understand the risk of the products that they are investing in. So in terms of the peer-to-peer space, we would say it's somebody who can really have a decent understanding and a reasonable risk appetite. So somebody who might be able to absorb the loss of both the principal and interest. That isn't to say that that's necessarily going to happen, but there might be some losses across a range of investments through the peer-to-peer platform. So we would say that they are for investors who've got a better understanding of risk and an appetite to take that risk on.
And are there any particular things that they should expect and be wary of? I mean, obviously the interest rates that are being talked about, I guess, for the investors are higher than what they'll get on term deposits, so that has appeal. But
yes.
I guess your message there is with higher interest rates comes more risk. And then in terms of borrowers, they're being promised lower rates,
yes.
Obviously, so that appeals too. So anything in particular, anything else that people should be wary of or considering here?
I think it's really important that you understand the amount of due diligence the platform has done on the persons who are seeking to borrow money through the platform, and that might vary across the various platforms. There isn't necessarily a one-size-fits-all approach to this, and some of the platforms will look to diversify your loans across a range, your investment across a range of loans. So it's important for you to understand, what is the platform doing for me? And what is their debt collection and credit control mechanisms, so that you kind of understand going into it kind of what you're going to get out of it. So as I say, there will be differences across the platforms. Harmoney has been quite clear about the fact that it looks to chop the amount that you're borrowing across a range of different borrowers, but other platforms just might match you one-to-one. It's important for you to understand, well, what's gone into Harmoney assessing, or another platform assessing, the credit risk of this entity or individual as X. So really try and ask lots of questions and read the materials they've posted to their sites. On the lending side, really, we expect to see quite a diverse range of customers for these platforms. Clearly, various platforms are going to go after particular target markets. Harmoney has been public about what its target market is for its particular platform. And we would expect that some businesses might look to supplement bank borrowing with some peer-to-peer lending.
And obviously, you're the regulator of this. The regulations, you described them to me when we spoke a couple of months back as saying the policy settings are purposely set at the promotion end here. So the implication that I took from that is that obviously they're not as strict as the regulations on, for example, say banks. But over time, could we see some changes to the regulatory settings?
I think it's important that the regulatory settings for a market conduct regulator remain appropriate to the market that you're regulating. So one of our key functions is to make sure that those settings do remain appropriate over time. Here we're at the absolute infancy of this new way of accessing funds. So right now, the settings, as you say, they're about getting these things off the ground and enabling them to grow. We will keep an eye on whether those settings remain appropriate over time. That's one of our functions, and obviously something that we take very seriously. The licensing criteria and the hurdle that people need to kind of get over to get a license, it is set appropriately to enable these new ways of raising capital to launch. And we'll be just ensuring that remains appropriate as they grow and as perhaps they're accessed by a broader range of investors. The other part of that is that from particularly in the crowdfunding side, we are obviously, as the conduct regulator, have this new power under the Financial Markets Conduct Act to make sure that there's no mis-selling or misrepresentation. So whilst we regulate the platform, we will be keeping an eye on the people who are using the platforms to make sure that they are also behaving appropriately.
These are obviously, as you say, in New Zealand, both peer-to-peer and crowdfunding brand new.
Yes.
We have seen them in action elsewhere in the world, though, so obviously you've been able to draw on some of what's happened over there. And in some places they have grown very quickly. Mm-hmm. I just wonder how happy will you be to see fast growth in either peer-to-peer or crowdfunding? And I guess to take it a little bit further, obviously when money is lent anywhere, people do tend to lose some at some point. I mean, mm-hmm. No investment comes without risk, as the saying goes. So how concerned are you in the early days of this that everything actually goes well?
There's quite a lot in that. These definitely form part of the government's business growth agenda. So was a real need to find new sources of capital for New Zealand businesses to grow, and both crowdfunding and peer-to-peer lending are a response to that need. So there is both a perceived and actual, I think, gap in the way that smaller New Zealand businesses can raise capital to grow, and these two mechanisms are important avenues for those entities to gain that growth capital. In terms of how big, how quickly, yes, overseas these things have taken off quite quickly, and I think that ties back to your first question about making sure, or your previous question about making sure the regulatory settings remain appropriate as these things do grow. We don't have a view about how big these things should get. We're more concerned that the operators are complying with the regulations and that people aren't being harmed. To get to that second part of the question, any investment does come with risk, and to us, going smoothly isn't about people not suffering loss. It's about people understanding the risk that they're assuming and understanding that that risk might manifest itself, and actually what does that mean when it does. So going smoothly or going well doesn't mean to say that people aren't going to lose money. Going smoothly or going well means that the people who are using the platforms are disclosing those risks appropriately, so people understand the risk that they're taking on, and the people who are investing them understand that risk too. So it's about actually understanding, gee, what am I accessing here?
And in terms of the licence applications, now, I mean, obviously you don't have to issue licences to anyone who applies. Have you rejected anyone yet for either a peer-to-peer or crowdfunding licence, and do you anticipate that you will be doing that?
We haven't rejected anybody as yet. It's fair to say that in some cases we've had a degree of dialogue about what our expectations are, and perhaps the gaps between what we might have first received and what our expectations are for a licence to be granted. And obviously all of the cases where licences have been granted to date, if there was a gap, we've been able to bridge it. You'll be aware that we've got one licence application on hold, and we will wait until we receive all of the information we need to be able to fully consider that particular application and any others that should come along. But certainly the standard is objective, so if people are not able to satisfy the standard, then the licence won't be able to be granted by us. We must be satisfied that they can deliver the service.
Obviously, we've got a lot of work going on at the moment around a responsible lending code, and there's lots of consumer credit laws in place and being updated.
Yes.
Have you determined where loans made through P2P platforms will fit into all that?
We're currently working with the Commerce Commission on that, so it's a bit of a work in progress at this point in time. Clearly, it is an issue of concern to us more broadly, and we wouldn't want this to kind of fall out of protections that should be in place.
And another thing, obviously, people will want to see when they're considering lending money through P2P platforms is what the default rates are. But with Harmony, for example, they're talking about loans for terms of 3 years or more. So it's going to be a while, I guess, before we see any of that data. Yeah,
it will be a while, and that is one of the things that we say in our materials to make sure that you do ask is what are the default rates that are on the various platforms, because obviously that will give you an indication of the effectiveness of that platform's controls in respect of the people who are seeking to borrow money through that platform. So it is a bit of a lag, but it'll be very interesting to see that data when it actually is available.
Yep. And that material that Elaine referred to is these brochures that the FMA has put out. So can people get those from anywhere in particular, or
so we have these available at our offices. Yep. Also, we've made these available at the financial advisors, and if you want one, you can contact us and we can send them to you. So they're a little brochure that really sets out what are these new forms.
Have a look at those.
And what are the risks involved, and what kind of questions should you be asking?
And obviously you've got a lot of information on the FMA website as well.
We do.
Yep.
Yes.
Okay, well, thanks a lot, Elaine. That's Elaine Campbell, the Director of Compliance at the FMA, and I'm Gareth Vaughan at interest.co.nz.